Hello and welcome to the Physical Therapy Owners Club podcast. I'm your host, Nathan Shields, and today we're doing a little deviation of what we normally do with the podcast. I do have a frequent flyer guest, our favorite financial advisor, Eric Miller, on with us from Econologics. Eric, thanks for joining us today.
My pleasure.
And for those who are listening, it's not just Eric who is on the episode, but it's also Mastermind Group, the Physical Therapy Millionaires Mastermind, which includes 6 PT owners from across the country. And we've invited Eric to be part of the mastermind and present on the topic today, which is how to get through a cash flow crunch, which is kind of an issue for PT owners, especially at the beginning of the year when deductibles come into play and maybe there's a reset from patients after the holidays where things tend to slow down at least for a couple of weeks. But if that gets prolonged, of course, that could be an issue, but it is timely for anyone who's in a cash flow crunch. It could happen any time of the year, right? But he's joining us in the mastermind. He's going to present to the mastermind. He might ask questions of the individuals of the group, and they could ask questions of him. So if you hear other voices, just know that this is a presentation that's happening amongst the mastermind for this month. So again, thanks for joining us, Eric. Thanks, guys, for having him on. And I'll turn the time over to you, Eric.
Okay, good. Well, all right, guys. Well, here we go. It's a topic that I know that we don't like to have to talk about very much because, when you're in a cash flow crunch, that usually means that bad things are happening. But I can just tell you this, and I've worked with all types of practice owners in all different stages of their financial journey. I've yet to meet anyone that did not at some point in their career have to deal with a cash flow crunch at some point in time. So for me, it was interesting because when I started working with practice owners, look, for most of you, the reality is that the business is the main generator of income for your households. And I know that most of you don't always want to be in that financial condition, but the reality is that when you're getting your practice and it's, you're trying to build it, it is the main generator of income. So if it has a cash flow crunch, that has a direct impact on your household. So when I started to see that, of course, as an advisor, because I know that's where a lot of my clients' money is coming from, I'm like, okay, well, what are some actions that you can take that will, allow you to get over whatever the cash flow crunch is. So, I did a lot of, study and observation and, look to see what other people had done and things that you can do to salvage your business when you are in a cash flow crunch. I think it says it all. It's aptly titled, I think. So what I'll do is just go through some of these items, and there is a sequence to them in terms of the action steps that one would take when you're confronted with, a cash flow crunch. And I guess, defining cash flow crunch is what? It's when more money is going out than what is coming in. You could define a cash flow crunch that way. But I also wanted to make sure that I associated what role you're playing when you utilize these actions. Because again, if you've ever heard me talk, a lot of what we talk about is that you have 3 roles in your business. You have your owner role, you have your executive role, and you have your practitioner role. And I wanted to try to align what these actions were with, what role you're playing when you're trying to correct it. So I'll go over that as well as we go through this. To start, I guess the first thing that I have everyone do, and I just had a conversation today with he was actually in the chiropractic industry, but he was having an issue with cash flow. And the first thing that I tell everyone is that when you're having a cash flow crunch, the most important, the most vital, the most necessary thing that you have to do is that you have to go back in and reestablish the purpose, the vision, and the mission of the organization with everyone. Okay. I know that there are external factors of why, your business cash flow can be interrupted. But I will say that 99.9% of it is an inside job. Okay. Of why you are where you at. Okay. You can blame the external factors, but more likely than not, it's an inside job. of why it is in the condition that it's in. Okay.
It sounds like you're speaking a little bit from experience, like you've just seen it too many times. Seriously, do you mind going into that just a little bit? Maybe either examples or
Yeah.
situations
Well,
where
I
you
think
can see it's an
we
inside
go,
job.
yeah, as we go through this, I think what you'll see is like the emergency never just happens. I mean, when the emergency occurs, it happens really, really fast, right? Like a catastrophe happens really, really fast, but nothing breaks down over a short-term period of time. It's because that there were a lot of outpoints that were being created that you let fester that led to the emergency.
Mm.
Okay. So whenever you see, I mean, you can utilize this for a marriage, for whatever it would be. You know, it's like you just don't get divorced overnight, right? It's like there were a lot of things that were not handled or confronted prior to the emergency. Now, when the emergency or the catastrophe happens, it happens super fast. Okay. And it's hard. But I say that because there are a lot of things that you could have done that you didn't, that were leading up to what happened, you know, to cause the cash flow crunch.
Do you mind if
So,
I just shared an
yeah,
example here? So one of the members of our group, Pratik, he decided in early December, he shared with, do you mind if I share your plan for handling the beginning of the year issues, Pratik?
Oh, yeah, no, definitely.
Yeah, I'll just summarize really quickly, but he decided, and he shared it with the group, was he decided in early December that they weren't going to have a slow period at the beginning of January. Like
yeah,
he'd been in business long enough to know that there is a slow period because of multiple factors at the beginning of January. And so the idea was to decide, number one, there wasn't going to be a slow period, get that expression through the organization to lead out on that. And then from there, decide these are the things that we're going to do such that it is not a slow period. We're going to talk to our patients well before the holidays about continuing their plan of care so they continue to get better, and how not coming in for a week or two because of holidays or beginning of the year is going to disrupt their progress. And then also make out calls to past patients so that they come in at the beginning of the year instead of waiting, and putting that front of mind. He had a list of what, 7, 8 things, Pratik, that made it so that they weren't slow at the beginning of the year.
yeah. That's,
And is that, I think that goes to what you're talking to.
pretty much, it's just a disagreement that you know, because we can all come up with 1,000 different reasons of why things are happening, but it doesn't really solve the problem. So you just kind of like this, you have to have some level of disagreement of whatever it is. You know, I hear this all the time. Well, it's that time of the season. It's, you know, this is traditionally a slow period, you know, and I'm sure there's validity to it, but you know, you have to be like, okay, well, what can we do proactively so that maybe the effects of that aren't as hard as they usually are, or as impactful as they usually are. Okay. I'm not saying that there aren't external factors, because I mean, if the government shuts you down, what are you going to do? That's an external factor. I'm just saying that 99.9% of the time it's because of inside factors that are causing the cash flow crunch.
And in this situation, yes, you reestablish purpose, vision, mission. These are team meetings. These are conversations that you have with the team. Do you let them know that there's a cash flow issue?
Yeah, heck yeah. You know, I think one of the worst things that you can do is not communicate with your staff about money. And I know a lot of people don't like to do that, but I can just tell you that it's because, again, you got to remember, and I'll go back to this, you know, and I've said this before, an organization will try to spend every dollar that it makes and then some, but it will also make what it thinks it needs to make to survive. So when you, as the owner, say to the organization, guys, we need to make this amount if we're going to keep our jobs, if we're going to continue to help people, if we're going to, you know, we want to bonus out, you got to get the buy-in from everyone. Okay, that this is what the target is, because, you know, that kind of goes to the second point right here. But the first thing you have to do, because if something is dying, right? If an organization is dying, and when you start having a cash flow crunch, that to me is an indicator that the organization is starting to die. Okay. Not to the point where it's going to close down, but the production is lower. You know, it's starting to go in that direction. You have to imbue life back into that organization. It may sound corny. It may sound, you know, kind of like a rah, you know, just one speech is going to do it. But, you know, you have to get the purpose back in the organization of why you're there in the first place, right? And everybody just has to buy into that that belief. Look, we're here to relieve people from pain or discomfort, whatever it is, whatever your purpose of the organization, make sure it's memorialized and get people reinvigorated. People do things, they're not just money motivated, duty. There's other things that motivate people, and really getting people, reinvigorated in what the purpose of the organization is, I think is the most important thing that you can do to start off with.
Yeah, people buy based on emotion.
Yes.
And not just material things, but also they buy your purpose and vision and mission based on emotion, right? They are aligned through emotion.
Yeah. And this also will help you identify the people that are not, which as we go down the list, you'll find is probably one of the reasons why you're in a cash flow crunch in the first place.
Right.
Is because you have somebody in there that is basically working against you.
Mm-hmm.
But the second one, of course, would be making sure that you're operating on the right targets. And again, to your point, I think most people are way underestimating how much the organization actually needs to bring in to maintain solvency. And solvency isn't just meeting your expenses, it's having more, which of course means that you have to include your profits, your reserves, your taxes, expansion, whatever, we can do a whole nother webinar on that, but that has to be part and parcel of what the organization thinks it needs to make. And that's what I'm saying is like the whole organization should know, like, oh God, this is our make break number. Okay. Now they don't have to know all the expenses, but they should know what the make break number is. Internally, that you factored in your buffers into that equation. Okay. But the necessity is on making that make break number. Okay. And it has to be correct. Otherwise, if it's not, then, I'll just go back to the two gold rules of income and expenses. The business will try to spend everything that it makes and then some.
I had an experience with a veteran physical therapist on my team, and we were in the slow season in Arizona. New patient numbers had gone quite low. And I, with her in the back room at lunch, and I just said, we're going to have so many new patients this week. We could get down to so many visits this week. And she looked at me with deer in the headlights. Like she had no clue, no perspective of what those numbers meant whatsoever. And I immediately thought, that's my fault. They don't know like what's good, what's bad, what we need to hit, what the expectations are to simply break even or, cover themselves or cover the expenses in the product. They just had no clue. And that's the fault of the owner at that point.
Yeah. I think it's okay to communicate. I mean, you're not going to give them every single, nuance of your expenses, but I think that number is really important for everyone to know. Right. With that, just going on that basic datum that I say, about the organization spending more than everything that it makes, but it will make exactly what it thinks to make. Okay. And I've just seen too many examples of that in small organizations, in big organizations, in governments, in, whatever organization you want to pick. That seems to be a natural law of finance amongst people that occurs. Okay. Obviously your promotional activities, you shouldn't decrease it. I mean, we saw a lot of this, especially when the pandemic hit. People, the first thing that they were cutting is their promotional activities. Making your good works known is promotional activities. And that's the last thing you want to do, is decrease those promotional activities at that point in time. I know it seems counterintuitive, but I think that's an area that a lot of people will cut, but that's the thing that you have to, increase, because you have a problem with not having enough new patients in the door, to seeing patients. So you really have to make sure that your promotional activity. So it's just a counterintuitive thing that first thing you want to cut is your marketing and promotion. And it's really the last thing that you should do.
Yeah. David was a good example of this. He shared with me how he's increasing his marketing budget here the first month of the year. Isn't that right, David? You increased it quite a bit.
Yes. Yeah. I doubled what the normal spend was.
Works every time. Okay. The next one has a lot to do again with money and speed. Okay. Now money loves speed. Okay. And I say that because when you work fast, Okay. Money loves speed in that respect. And when you're facing insolvency or a cash flow crunch, it's kind of like, if you got sports fans here, what do most coaches do when the team isn't performing as it should? They round them up and say, let's just get back to basics. Okay. What is it that ideally our organization needs to do in order for us to meet our make break number? Okay. I just need to get everyone back to doing their jobs, but I have to make sure they do it with a lot more intention and speed. Okay. Take time out of the equation wherever you can. That's a mantra that you'll hear in this office all the time. Take time out of the equation as much as you can. And you know what I'm talking about in terms of time, patients getting scheduled, patients getting called back, programs getting implemented, billing and collections, aggressively getting money in, wherever you can take time out of the equation, that will increase the speed, and money loves speed. And that will definitely increase the production and the income by doing that.
Collecting money at the time of visit.
Yeah.
For many owners, that can be difficult, especially during these deductible periods where the patient might have a $2,000 deductible and they don't collect part of that deductible at each visit. And that's a trap that we fell into, is we wait until the EOB came back and then bill the patient for that deductible amount, instead of collecting at least a portion at each visit that would go towards their deductible.
Yeah.
And that's the speed that we're talking about. Let's not wait, 4 to 6 weeks to then go back and bill the patient. Then collecting is rather difficult. Let's get it at the time of service.
Yeah. And really, but it really just makes sure get people to do their jobs. Right. I mean, that's going to be your kind of your executive and your owner function. I just need people to go back and do their jobs. Okay. And you'll find out, maybe where people have a disagreement, or, someone that you may have to confront and get rid of.
Right.
The next one really, probably doesn't apply too much for the PT industry as far as promoting highly profitable and easily executable services, because you guys, I guess to the point here, it would be, what are those income sources in your business that you can deliver quickly and have good profit margins, and you can get paid for, maybe some cash services that you have, cash-based services that you're trying to deliver, do those things that are highly profitable and easily executed, especially when you're in a cash flow crunch. Okay. Because right now you're just trying to get money in as fast as you can. Right. So what is that? It's going to be good profit margin services, and those that you can deliver really, really quickly so that you can get the money in for that, whatever that would be, in your practice.
Do you find many, just an idea, Eric, considering that, do you find many physical therapists that you work with that have massage therapists on staff that can sell massage therapy packages during a cash flow crunch, or promote that a little bit more?
100%. And I think, again, this goes to like looking at your facility, and you have so many square footage in that facility. Okay. How do I maximize the production out of that facility? And what are the income sources that I have available to me to deliver in this facility? If I got a 5,000 square foot facility, and I can see so many patient visits, but maybe, we can use this space for massage therapy, or this space for dry needling, or whatever it would be. Right. Whatever services you could try to maximize the efficiency and the capacity of that space. That should be really the game. Like everyone here should be able to name, like, if my facility were operating at optimum capacity, I had maximum number of patients, maximum number of staff, we were busting out the doors, my reimbursements were getting paid on time, I had some cash-based businesses, what could my facility do in revenue? Because that's going to be the maximum amount of value that practice will provide you and your household, not just in enterprise value, but in cash flow to the household as well. So there's a number of reasons why you would want to make sure that you get to that, to get to that number.
That's a great exercise.
Yeah. It's one that we try to do with everybody, is really making sure they understand what that number is. Okay. Because, and I've said this a million times, and maybe some of you guys have heard this, maybe some of you haven't, but I'll make a bet with everyone when I say what your biggest expense is. And, I'll say, especially in the PT world, where, you're looking at 55, percent or higher of staff wages being the norm of your biggest expense. And most of you think that's your biggest expense. And then I say it's not. Your biggest expense is money that you should have made, but you didn't. And that has a lot to do with the size of your facility, and are you getting the most out of it that you possibly could? Because if you have a facility that can do 250,000 a month and you're doing 150,000 a month, that's $100,000 of lost income,
right,
that you never get back.
Okay.
So anyway, we kind of went off on a tangent there, but
No, that's great.
Yeah. So again, you're in a cash flow crunch. You have to inspect your cash flow lines. Okay. When I say that, like money, again, I know it sounds kind of, I don't know what term to use, but money is an energy, and there are things that can obstruct the flow of money coming into your organization.
Mm-hmm.
So you have to inspect your income lines. And, again, I've had people that they started to see their numbers go down, and they didn't do anything about it. They waited 2, 3, 4 months. I'm like, no. When you start seeing that number go down, you attack that immediately and find out why it is that this is occurring. Okay. And a lot of the time you're going to find you may have the wrong people on your collections lines. Okay. You need someone that has a bulldog mentality when it comes to getting money into that organization. A bulldog mentality, not afraid to say no, not afraid to ask for money, not afraid to offend. Okay. Because it's just that important. I mean, solvency is the most important part of your organization is being solvent. So, unfortunately you get people that are having, and again, I know everyone's going to have their issues, but when you start having people on your collection lines that are always having problems, that are always having personal problems, that, are sympathetic, to hard luck cases, or they just don't have a disdain for money, like you better not have those people on your finance lines. They will literally kill you.
Yeah. Those people that have a hard time asking for a copay.
Yeah.
That can't work.
Nope.
No. And this is where also it's really difficult for PT owners they don't know what they need to assess when it comes to the billing and collections reports. If they don't know, or if they haven't had experience with it, and they're not sitting down with their biller on a monthly basis, they, number one, don't know what they're looking at. When they're given reports. Number two, they don't know if those reports are good or bad.
Yeah.
They don't have perspective. And number three, they don't know how to hold their billers accountable. And so that makes it really difficult for them to assess those cash flow lines.
So you would definitely need to have some percentages, some basic metrics that I'm sure you could provide that too, of like what you should be looking for in an ideal. Again, this all comes back to like the ideal scene, what that looks like. Because how do you know if the wheels are off the bus if you don't know what looks like when the wheels are on the bus?
Right.
Right.
And that's where you need to talk to your coach, or if you don't have one, me, or talk to Will Humphreys. He'll do a free audit for you.
Yes.
Right.
For sure. But yeah, I can't stress that enough in terms of, people with a lot of personal problems. You just cannot have them on your finance lines. Okay. You just can't. I'm not talking about like, because everyone's going to have personal problems every now and then, but they have to keep that off, because again, sometimes these people become a repellent of money. They do, and I see the characteristics of those people. They just repel money coming into the organization. Maybe I've said this before on the podcast, the 2 miracles of business, and this actually is going to lead into number 8, which is amazing what happens. I can't tell you how many times I've seen this. 2 miracles of business is, number 1, the day that somebody shows up for help, like that first day when you got your first patient, you're like, oh my God, this actually may work. Right. And the next miracle of business is the moment that you get rid of a toxic individual out of your organization. I have never seen people revenue increase more than when they actually spotted the negative source. And it's usually just one. Okay. One person in the organization. Okay. And it's amazing what happens when you root out that toxicity of the organization. It just goes like this. Okay. So again, a question that I'll ask is, and this isn't like if you're having a cash flow crunch, like, I mean, if it happens like once, okay. But if it's like a perpetual thing, if it's something that's continuing, you got to look and find out the person in the organization that's actually trying to do this to you, because it is a who. And it's usually one person, and it's amazing what happens when you root that out of the organization. This is your owner hat, because you're responsible for the morale and the culture of the organization. And if you can't get rid of that person, confront them and get rid of them, I don't care how important you think they are to the organization, then it's going to, it's going to keep a cap on what you can do.
There was one of our owners in our group experienced this last year, right, Mike?
Honestly, I kept someone on for a really long time for just good reasons. Relatively, it was a compassionate thing. And then beginning of the last year, things happened where we were able to kind of give an opportunity to go out. And then we've increased our revenue significantly in the company. This last year, we probably doubled our revenue, just simply by putting key players in place and actually bolstering those that are willing to work well. So it was a hard move that I didn't want to make. Made some choices to kind of get that to correct. And it was just pretty significant. So, yeah.
Yeah, you didn't say it just kind of like you went up like 5 or 10%. You said you doubled your revenue.
It was ridiculously significant.
Say that again. You doubled your revenue, right?
Doubled my revenue.
That's crazy. Okay.
It was significant.
Yeah, you can see the importance of that then. Like an organization is made up of people. And unfortunately, there's going to be 2.5% of people out there that just don't want anything good to happen to anybody. And as you expand your organization, okay, to maybe 5 people, to 10 people, to 20 people, to 30 people, you're just going to have to realize that the law of large numbers is going to affect your organization at some point. You're going to bring in one of these people. It's just finding out who they are, getting rid of them, and doing it fast. It's just when you let them linger, you can tell the weight of the organization, what it does, and it's not a good thing.
I should have done it 6 months before then.
Yeah. I think everybody has that story. We had that last year in our organization. We had to get rid of 2 people because, we found out there was some underlying toxicity. I had been not doing well before that. So, I have experience on this too. It's like, we do the same thing. It's like, why am I not feeling good? My morale's not high. And we just had to inspect and, find out where it was. And then, you can see what happens. But it's probably the one thing that will, give rise to your cash flow faster than anything else is just is really rooting out that person and going from there. The next one, to increase prices. I wish you guys could, just increase your prices like all my other practice owners. Unfortunately, you can't do that. So this is where you just have to add, additional services. To your point, Nate, you have to add additional profit services, additional income sources, just because inflation is increasing your wages every single year, but not your profits.
Yeah, some owners are getting a little bit of extra cash flow from dry needling services or laser and musculoskeletal ultrasound. Yeah.
Yes.
Yeah.
And then the last thing, and I did this for a reason, the last thing is then cut expenses. So, there were 9 steps that you do before you even start thinking about cutting expenses. Okay. And I did that because this is the last area to examine, because, it's very rare that I find practice owners really spending money on things, like overspending on certain things. Okay. It's kind of rare that I see that. So, but there are some, you can go and look and see where maybe some needless expenses would be. But from our viewpoint, marketing, consulting, anybody that's trying to push you forward, anybody that's trying to give you, hold you accountable, anything that is going to expand the organization, I would never cut that as an expense. But I'm sure there's other things that you can look for, in your organization but that would be the last thing that I would look at as far as cutting expenses is concerned, just because it's just faster to make the money than to try to go through line item by line item on everything that you have and try to cut that expense.
Yeah, the knee jerk is to cut expenses
Yeah.
and doesn't get you very far. I love that you say, yeah, have you checked the previous 9 steps? Because not until you're really clear that you've done all 9 steps prior to this point should you look at your expense line.
And look, are these 9 steps? One step is not going to solve all of your problems, but I think if you collectively do all these things, I've seen too many people that have implemented some of these or part of these that has, allowed them to, remedy their situation pretty quickly. But I just would not let a cash flow crunch, definitely don't ignore it. If you start seeing that your collections are going down, don't just like kind of hope and pray they're going to go up. You got to attack that almost immediately and figure out why that's occurring. And that's probably the biggest issue that I see a lot of practice owners do. They may just go months and months without really attacking that. And then all of a sudden it's like, oh my gosh, what's going on right now?
Right. One of the questions from our group from David was where would you borrow money from? What are good sources of funds versus bad or worse sources of funds when it comes to a cash flow crunch?
As far as like where to tap into credit lines and those kinds of things.
I think that's where you're going, David. Of course, the best source of funds is to have a reserve account. That would be ideal. But when you're looking past that, where would you look?
Yeah, I mean, I think again, the having a 2-month reserve fund would be optimal. If you have really anywhere, I mean, a business line of credit, if you had one of those, but you're not going to get a business line of credit if you're in a cash flow crunch. So a lot of these things you have to prepare for prior to that, knowing that at some point, look, I know if I have a practice on the Northeast, it's quite likely that there's going to be a snowstorm that's going to shut down my business for a week or 2. Okay. Like, I don't know when it's going to happen, but I know it's likely going to happen. Okay. And I always got surprised when I got a phone call from someone that had a practice in Boston or something like that. And they were like, well, we're shut down by a snowstorm. I don't know where I'm going to get the money from. Like, well, didn't you know that it snowed in Boston during the wintertime? Okay. So it's probably, something that you want to plan for. So, having business credit lines are always going to be good. In our system, we do put a premium on making sure that clients continue to put money into assets or investments that you can access, that there's liquidity features there, whether you can borrow from the asset, whether you can get a credit line against the asset. Like, I'm all for having cash and assets, but I also want to make sure that you have plenty of credit lines, attached to those assets in case you do need to tap into them. It's a phone call away to be able to get access to it.
And I think you're referencing certain life insurance policies that can also be lines of credit as well, right?
Yeah, or brokerage accounts where you can get securities back lines, a security back line of credit against a brokerage account. You can tap into a lot of different things. The key is just making sure that you have access to all of these things. If you have a home, having a home equity line of credit that if it's accessible. Same with your building. If you got a building and you got equity in there, get a line of credit against it. Again, the banks will be more than happy to lend to you when the financial seas are calm. But the moment that you demonstrate that you're in a cash flow crunch, they're to be like, haha, bye-bye. We're not going to talk to you. So this is like where the planning preparation comes in. And, quite likely when you do all this planning, when you do have open credit pools, when you do have all these things, when a cash flow crunch does come, it's not as impactful on you.
Right.
It doesn't impact your household, doesn't impact your morale, doesn't impact your emotional well-being, because it does have a pretty big impact on your emotional well-being. When that happens.
When you so some owners might have one clinic out of 2, 3, or 4, 5 clinics that financially isn't doing as well as the others. And I'm assuming you recommend that they each clinic has their standalone financials, right?
Well, it really all depends on your transition plan. Like, what are you planning to do from a transition standpoint? But, there is a concept of trying to compartmentalize all the clinics so that they're standalone to that degree, maybe from like an asset protection point of view.
Oh, sure.
and a financial point of view too. That way you can look and see, you know, am I subsidizing this practice? Am I willing to do that? And how long am I willing to do that for?
Yeah,
You know?
I guess I just bring up the point that it's important, I think, for owners to do some kind of, even if they're not separated by the veil of limited liability corporation, but at least financially their books are separate.
Yeah.
So you can see that sometimes the overall organization is doing well, but one singular clinic might not be doing as well financially. And so it's important to recognize simple cash flow issues in those singular clinics outside of the other 3 or 4.
Yeah, for sure. So, I mean, you should understand how to read a profit and loss statement and a balance sheet, and maybe that's what we'll do. We'll do something on that, like making sure that everyone understands how to read those things.
Profit and loss statement, and do a little webinar, right?
Yeah, there you go.
I got you. Any other questions from the group, or even comments that you want to share with Eric? Mike, you put something in the chat there.
Yeah, I was just going to mention, I find it interesting. Your list is pretty all-inclusive. I think not just for times of cash flow crunch, but just generally, it seems like these are good business practices that we should pretty regularly stay on top of, regardless of our financial situations. I think that would trend us better to, you know, having more cash on a regular basis.
I think that's 100% correct. They're basics, right? And the reason that the cash flow crunch occurred is because the basic actions went out. And so when you get these basics back in, I think to your point, it definitely allows the organization to be more stable. And I mean, you're going to have your ups and downs. I think the point is that you just don't want to have those downs that are super significant, you know, and, you know, just making sure that you're putting these things in play so that, to your point, you know, you can correct these really, really quickly. And yeah, so that makes sense.
Kind of as a follow-up to that, if you don't mind, are there any other maybe best practices that you didn't have on the list? Like you mentioned it a moment ago, reviewing your profit and loss statement on maybe a monthly basis. Are there other keys that you would put into this list if it wasn't so much a cash flow crunch, but like a good practice act?
Let me think about that.
I'll second the monthly financials review with your CPA for sure. That was huge for me.
Well, you know, for certainly the frequency of talking with your financial team, I think it needs to happen a lot more frequent than what it does. Just because, especially if you're growing quickly, you know, your tax liability, I'm sure we've all had that moment where we got a call on April 15th or whatever, 14th from our accountant. It was like, oh, by the way, you're going to owe a lot more in taxes than what you thought you did, right? Because you didn't, there wasn't much communication up to that point, right? And you were growing, and they, you know, and again, they're pretty reactive in their approach. They just want your reports from the previous 12 months. So you got to be super proactive as a business owner, knowing that, oh my gosh, I'm growing. I should probably make sure that we're setting aside the proper amount for my tax estimates, and that there's some planning that's involved prior to that, so that I can address any non-optimum tax liability that I may have. That's a good one. I don't know, Mike, I probably need to think about that. I can probably come up with a list of another 20 things as well. You know what, if you hold on, I don't want to, there were some other things that I know that we had talked about in the past, like some characteristics that you have to be, that people are uncomfortable being. Like I had mentioned that you have to be a bulldog on collections, right? Like I think that mentality is important. I think that, you know, you have to be able to understand all the lines in the organization so that you can spot where the resistance is coming from in the organization. Like I'd mentioned that before. Like I think a real skill that you have that you need to develop is, you know the lines of your organization. Someone, you know, is marketed to or referred to, they come into the organization, they sit down, they go to the front desk, they go to a treatment room, they get cared for, they come out, they pay. Sounds so simple, right? then why does it get messed up in so many different places? So your ability, I think, to be able to know exactly what the ideal scene would look like for every post in every division of the organization is really, really key, so that you can kind of spot where the wheels are coming off, you know? So I think that's something that we can all do a little bit better. And that's just that's having the time to wear your owner and executive hat and not just being a practitioner the whole time.
That was something that came up last week in that I was asking an owner about their clinical statistics, and he gave me the statistics, and then I asked, well, what about the individual provider statistics? And he hadn't gone that deep with the stats. And what my experience is that sometimes even if the clinical statistics look fairly good or average or a little bit above average, and there are 2 or 3 providers underneath it, when you dive down into the individual provider statistics, two out of the 3 are usually working really well, and a third one is being average or below average and needs to be addressed. And so if the message was to the whole clinic that we want to improve our statistics, or hey, you guys are doing well, then those 2 out of the 3 are saying, well, we're really busting our butt, knowing that the third one, typically they know that the third one isn't producing as well. And whereas it's more effective if you can isolate that one provider and talk to them specifically about their down stats.
Yeah. There's a question about how good is a CPA in avoiding a cash flow crunch. Would you recommend setting aside, what would you recommend setting aside for a good CPA that is a tax strategist on a monthly basis? I mean, it really all depends on what your income is, but I mean, I can tell you just by stats alone that most of you guys are paying $20,000 to $40,000 in taxes more than what you probably should. So whatever the amount that you would pay to someone to recoup that amount would be worth the investment.
I see what you're saying. If you have to pay him a couple $1,000 to save 20, that's good investment, right?
Yeah.
Okay. I see the math. I see where you're going there.
So I think that's, it's a reality. I know. And you know, the higher your income is, the more accessible, not accessible. What's the term I'm looking for? Well, there's just additional tax strategies that you're now eligible for. That's what I was looking for. Yeah. That a lot of people just don't probably present to you. As you get into that $300,000 to $400,000 income range to $500,000 income range, you really become eligible for some really cool things.
Cool. Well, hey, thanks for your time today, Eric, especially joining the mastermind group. If people wanted to get in touch with you, how do they do that?
They can just go to Econologics.com, or you can just email me at eric@Econologics.com.
Cool.
And get my information there. And we got a lot of these things we have are in download form. So if you go to our website, I'll have the cash flow crunch checklist there. And we probably have, 12 other checklists that were built for practice owners and your experience, and all the things that you guys go through from, beginning to end, exit planning, checklists. And I think that would be some other things too that you could download that would give you some best practices as well.
For sure.
So, well, and then
that exit strategies or exit checklist, Mike, to your point where you asked for things that were just good business strategies, that exit strategy checklist is really, really good. It's huge. Yeah.
There's a lot of good things on there about what to do to get your practice into a more ready or a better condition so that it's as valuable as possible when you decide to transition out.
Right. And it overall makes it a better value practice, even if you don't exit. Right.
Yep.
Cool. All right. Well, thanks for your time, Eric. I appreciate it, man.
Okay, guys. Take it easy.
Thank you.
Bye.